Amazon almost looks like a screaming buy based on this chart. I think the thing that we need to watch out for with Amazon at this current juncture is just how much capex they've spent on these data center buildouts. So as we saw in the historical chart, the Amazon share price follows their operating free cash flow far more than their earnings, just because Amazon for the longest time reinvested and was never actually making earnings. So they're actually projected to grow their free cash flow a lot over the next few years. So if you got the proper return on multiple from this point, Amazon's actually looking really cheap. The thing I'd be cautious with is how much capex did they spend on data centers and what's the ROI going to be on that? Because we could start seeing a very large hit to that when they start depreciating their GPUs. We haven't really seen a benefit in the AWS revenue from their earnings calls, so it's just something to watch out for. I think a lot of these big tech companies, their future outlook is very inflated based on the optimism from the data center build out. But I think there's yet to really show anything for that, and they're just they spent all this money and they expect this, but I don't know. So at this point, Amazon looks like a screaming buy on this, based on this, but I don't know if it's to me it's a more wait and see, and for me to get 20% year over year on Amazon, who's already $1 trillion company, they have to grow by hundreds of billions of dollars per year. And that just seems more difficult than a small company growing by, a $10 billion company growing $2 billion. This seems easier than a $1 trillion company growing by $200 billion. But that's, my bias has always been against big tech, and I've missed out on some just because I just don't like those companies.